Hello and thank you for joining this Tolley webinar. My name is Andrew Hubbard. I'm Editor-in-Chief of Taxation Magazine. And I will be spending the next few minutes looking back at some of the tax highlights of 2019 and forward as to what we might expect in 2020. In tax history, 2019 will go down as the year without a budget. You will recall that the budget that we were due to have was cancelled because of the general election campaign. Now, the tax geeks among the community here have been looking back as to when was the last year without a budget. And we're not sure that there ever was a year without a budget, certainly going back into the mid-Victorian era when the modern system of income tax started. So it really will be a very strange thing to have gone through the whole year without a budget. No doubt we will get one, maybe two, who knows, maybe three budgets next year, depending on the political situation. So if we didn't get a budget, what did we get? Well, I suppose the first landmark is that we finally got Making Tax Digital off the ground after what seems to have been an interminable period of nothing much happening. And you will recall that now some elements of VAT are within MTD. Now, I think to be fair to the revenue, the system has worked pretty well. I'm not hearing of any major reports of problems getting information to HMRC once people have actually got registered for MTD for VAT. But it is early days, and at the moment the revenue are taking a very light touch and not really looking behind the basic filings. It may be that if I do this in a year's time, the picture will be very different and HMRC will have started policing in some detail. But at the moment, I think we can say that MTD for that has worked. The big question, of course, is what will happen for other taxes. We would, on the original plans, by now be doing everything virtually digitally in tax. That clearly hasn't happened. And on the current plans, we won't be going into MTD for income tax before 2021. And who knows when it will be for corporation tax. I think the MTD program will still continue, and that in a few years' time we will have a fully digital system for tax compliance. I don't have a problem with that. I think if there is a sufficient time for it to bed down before it becomes compulsory, and that there is close cooperation between taxpayers, agents, HMRC and the software companies, we could have something that was a success, but it needs very careful planning. And I hope that one of the features of the next year is a rethink of some of the fundamentals about how MTD is actually going to work for income tax. If we look at other things that have happened during the year, one of the most controversial has been the loan charge. Many of you will know that as part of the attack on EBT arrangements, HMRC introduced the loan charge, i.e. a charge based on the value of outstanding loans, some of which may be up to 20 years old. That's been hugely controversial and has divided opinion. Some people have regarded it as an entirely just way of dealing with what they see as real tax avoidance in the employment sphere. Others, equally passionately, have said that this is disgraceful retrospective taxation and that many people who are completely innocent have been caught up with all of this. We don't know where it will all end. I hoped to have been by now reporting on the outcome of the loan charge review, which is being undertaken by Sir Amias Morse of the National Audit Office, but that too is a victim of the general election. We won't get the loan charge report now until after the election, by which time it will be very late to do anything if the revenue are going to make significant changes before the 31st of January filing date. But I think the implications and the controversy of the loan charge will be with us for some time to come. In the employment sphere, the whole area of IR35 and employment through personal service companies, or should I say engagement through personal service companies, has been a constant issue this year, largely fueled by the number of cases that there have been of presenters in the TV and radio industry and whether or not their arrangements fall within IR35. We saw, for example, that Lorraine Kelly was successful, or to be technically correct, Lorraine Kelly's company was successful, and on the alternative that Krista Ackroyd's company was unsuccessful. Very difficult to take generalities as to where we are on IR35. It just shows that all of that case law does depend very much on detailed analysis of the facts, and also I think how well the individuals come across in the tribunal. I suspect there will be more IR35 cases to come, and of course starting in April next year we have the extension of the deemed employment rules within the private sector. We've had them in the public sector. Big issue now for private sector employers, certainly the large ones, as to how they are going to comply with their new obligations under the IR35 rule. But this whole question of the balance between the boundaries of employment and self-employment and employment through personal service companies has been a very, very long-running feature. It goes right back to my early days in tax, and I can see that it will still run and run. There is so much at stake on this, both from the government's point of view, but from individuals' point of view, that I suspect it will take years before we get any sort of finally agreed position on all of this. So watch out for things that are happening in the IR35 space. If we look at what's been going on in the tax tribunals over the year, they have been very busy. I do a weekly report for Tolley on key tribunal cases, and I've never had any difficulty in filling my pages in the reports. This year we've seen quite a lot on some of the fundamental issues of how the operation of the tax system really works. What is a tax return? What is the purpose of a tax return? How can a penalty be charged if the return request has come from a computer rather than an individual? We've had contradictory results in some tribunal cases, and some of those cases are going through to the next stage. It's difficult to predict where we will end up. For example, what is the purpose of HMRC issuing a tax return? Have you ever thought about that? What is the legal position of HMRC issuing a tax return when it knows full well how much tax somebody should have paid but has not paid it? HMRC's practice has been to issue returns in those cases because then that allows them to collect the taxes through normal compliance measures. The tribunals decided in some cases that that was not a valid use of HMRC's powers to issue a tax return, and therefore said it was not valid, with the consequence that no penalties could be applied. The upper tribunal has reversed that and come back to the position that HMRC can issue a tax return for the purposes of enforcing liability, but I suspect that that will still have some way to go before it finally settles down. And we've seen a lot of cases where really some of the fundamentals of the Taxes Management Act, which is now many, many years old, coming up for its 50th anniversary, are showing to be very, very suspect around the edges as to whether or not it still works in a computer age. The Revenue have a couple of times announced retrospective measures to make sure that the Taxes Management Act works in the way that they thought it did work. There's some controversy over that. I think most people accept that in the end it had to be done. But putting sticking plasters over a 49, 50-year-old act is not really the way to go. And I'm hoping that HMRC will heed the many requests that have come from all sorts of sources, myself included, to say we do need a proper review of the operation of the Taxes Management Act and the whole process around the assessment and collection of taxes to be fit for purpose in a fully digital age. That, I think, will be something that I will be looking at, and I hope if I'm doing a similar broadcast next year, I will want to refer to. What else is there? Well, we've seen some important developments in case law in a number of areas on the question of whether a foreign registered charity is entitled, or donations to a foreign registered charitable trust are entitled to inheritance tax relief. We've had a look at some of the issues relating to transfer of assets abroad, very complicated legislation there. We've had some important cases about principal private residence relief, in particular, at what point do you start and stop the calculation of the eligible period for relief. Quite interesting there, we had the case where at the time the individual bought their flat, it was no more than a space in a tower several hundred or several feet up. It didn't really exist, but nonetheless was that the period from which their period of residence was calculated, because if so, they weren't living there and therefore didn't get relief for that period. We've had contradictory decisions of the courts around there, but now I think we've got that back into what I think most people would regard as a sensible place. But it's one of the fascinations of the tax system is that things that we knew or we thought we knew and had lived with for many years, when you look at them, they turn out not to be quite as we had expected. We've seen some more developments on entrepreneurs relief. I was just looking back in the Yellow Book at what was in the 2019 Finance Act. We saw the entrepreneurs relief changes there. We eventually got into a sensible position after the draft legislation created many problems that I don't think HMRC had predicted. We've seen some entrepreneurs relief cases around boundaries between trading and non-trading. That is such an important relief. I'm sure we're going to see more about it. And it's become a very political one. There is now quite a body of opinion to say that actually entrepreneurs relief is a very big tax giveaway that has no economic or political justification. Some of you have maybe seen that Sir Edward Troop, who was head of HMRC after he retired, has come out very much saying that there is no policy justification that he can see for entrepreneurs relief in its current form and certainly at its current very high levels. I suspect that we will see further discussion about whether or not it is right that there should be some capital gains tax relief when somebody sells a business. There always has been a measure of relief. Is it still appropriate to that? There are those that say that actually businesses would much more benefit from the relief if they had it at the early stages when it can often be a struggle. And that's where the tax system should help rather than when they've been successful and have sold off. But again, there are opinions to the contrary. And I suspect that entrepreneurs relief will continue to be a major source of discussion throughout 2020. So what else can we look forward to in 2020? Well, one of the things that I think is an important trend is tax devolution. We've now started to see the tax system in Scotland diverge from the UK system, both in terms of some of the ways that the tax bands work and the tax rates, but also in the way that their land and buildings transaction tax is slightly different from the way that stamp duty land tax works in the rest of the country. We've started to see Wales now having some elements of tax raising powers. There are provisions for Northern Ireland to have different tax rates if the Northern Ireland Assembly comes together. So I think when we look at how the tax system will operate over the next year and the coming years, I think devolution will be an increasingly important part. When I started my taxes and I looked at how the states operated or how, say, Switzerland operated with cantonal taxes as well as national taxes, I felt really quite satisfied that we just had one tax system. Well, that was a long time ago, and I don't think we will ever go back to that. I've done this whole broadcast without mentioning the Brexit word, but I assume that next year we will have some clarity at last on Brexit and what it does for the tax system. But please don't quote me on this and play this back to me in a year's time when we're still in Brexit chaos, But if we do get some solutions, then I think there will be significant impacts on the tax system. Clearly, there will be big changes in the whole sort of customs area. What it will quite do for VAT, we're not sure. On income tax and corporation tax, we think the effect will be less marked, but who knows where it all will all end up. I'm sure that there will be a mountain of further regulation that has to come to put in whatever the exit arrangements are in place. I suspect that the Yellow Book next year will be even more densely filled than it is this year. We will wait and see. But one thing is for certain, tax will still be there. There will be need for tax advisors, and I certainly hope that there will be need for tax publishers as well. On that happy note, I'd like to say thank you for listening. Have a very good Christmas, and can I be the first to wish you a merry new tax year. Thank you very much.